Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the Forex market today. So as you know, it's holiday in the United States, Independence Day, so market will be quiet probably. Besides, tomorrow we'll get the non-farm payrolls release. So I think that just could talk about some few details that maybe will be important tomorrow. So if you will take a look at the ADP report yesterday and some other statistics that we've got, it was mostly mixed, so not something really bad has been released, but also it was not really superb. So actually, it's a natural result. The price action that we see right now is not very representative because, as I said, this market stands quiet and it's difficult to make some far-going conclusions right now. In general, what I do not like with the market right now is that actually the weak reaction on the strong support. So usually when the market indeed stands bullish, it turns to the upside relatively fast. So for example, you could see how upside action develops at this point. So just 2 sessions and market skyrocket up. So here we have 3 sessions in a row if we do not take into consideration this collapse, and market stands flat. And at the same time, we can't say that market hasn't made any attempt to go higher. It was in the first test and the second, but all of them has been not really successful. So market right now stands in the tight range. In the current circumstances, it looks more bearish rather than bullish. The only driving factor that we have actually the non-farm payrolls, and taking into consideration, of course, this could be the situation could change, especially if we will see really bad data tomorrow. For example, I'm not sure if that will be really interesting, the numbers itself, because we talked about it many times. The market right now is highly saturated. Employment market in the United States, it's almost full capacity of the jobs on the market, so very low unemployment, and it is normal when the payrolls data doesn't show you the same pace of the increasing of the jobs created in the past month. It should and it has to slow down. It has to show the smaller numbers, but it doesn't mean that it's something bad with the employment state in the United States. So this is not really important indicator. What is really important is the inflation. So everybody will take a look at the wage inflation. If we will see some really big drop there, well, that really could push market higher. But purely technical picture that I see is not really very encouraging. On the 4-hour time frame chart, also what we have, our suggestion yesterday, this market could show the new low, was correct. As you can see, this grabber has been formed, and we said be prepared to the possible downward action because market actually has failed turn up on the first bounce up from this area and starts to turn down. And indeed, you can see market showed this Washington range of these low stops have been grabbed below this level and returned back up. But at the same time, as we said, level is rather wide, and market could breathe inside of it relatively free. So that's our suggestion now stands in place. You can see later when the data starts to release, you can see another attempt at the market moves higher. What on this picture looks not really very good for the bulls. First of all, take a look. Market holds below the weekly pivot, monthly pivot point, and those 2 attempts have been made trying to break through it, but from the pivot framework, the sentiment stands bearish because market wasn't able to move above the pivot in the short term. Within the 2 chances, you can see 2 attempts have been made to break it. In the condition when market stands in the very strong support in the agreement area. Also, I see that something like the bearish dynamic pressure is growing here because take a look, market is forming lower lows and lower tops. Actually, some kind of the flag form is forming here, which could continue downward action. But market shows the bull trend. it means that the bearish dynamic pressure is growing. So it could be just some spike down and market could return right back up, but also it could be a real breakout. So dynamic pressure indicator doesn't show you in what manner the downward action will be. It could be very short or it could be real downward continuation. It just warns you that the market should take it out of these lows. So that's what we have right now on EUR. On the hourly chart, nothing really special. So you could see here some divergence, but it's not really, I don't think that's really significant in the current circumstances. Well, our conclusion is that technically, overall picture looks not really very bullish, not attractive for taking the long position. So we already have tried to do this. When the market hits the XLP the first time, and we will get the bounce. So that was the 40 pips bounce. It was pretty enough to move stops to the break-even. In the current situation, when I see the reaction of the market on the strong support, this reaction, I'm not really very impressed with it. And personally, I would wait more and see what will happen, because in the current circumstances, with this price behavior around this support, I do not want to go long. With the dynamic pressure, with this really weak reaction on the strong support, with the data ahead that we will get tomorrow, because we should recall also our view on the Fed policy. I have real big doubts that the Fed will cut the rate, and that they will follow the dovish policy. So something wrong with it, because market definitely stands in overhead, and I mean economy on the United States. And when you have the ultimate consumption, when you have the ultimate stock market, employment, inflation around 2%, so it's very difficult to call it as a recession. It mostly looks like the overheat of the economy, and in current circumstances I suggest the Fed should raise rates, but not to cut them. But as you know, the recent statements suggest that Fed intends to cut it, and we see that here could be some real trick from the Fed. I don't know what will follow, but I don't like this situation. Well, in such situation, I do not want to take the long position right now.